Hello, everyone. First of all, wish you all a very happy new year. This is my first video I'm making in this new year, and I want to wish you a great, prosperous new year with all that what we've gone through, ups and downs in terms of 2021. I hope this new year will be all about positivity, will be a time where we'll completely get rid of this pandemic and have a very healthy and prosperous year for everyone. And we, as associated with the stock market investing, we're expecting it to be another great bumper year as it has been for last year as well. So, with that, I want to first of all share with you a stock analysis, a 360-degree view of a stock which is listed in Indian Stock Exchange, NSE, New Delhi Stock Exchange, and Bombay Stock Exchange. As many of you know that in this channel, I share all about stocks and investing analysis to make you a better investor. And I have been on a mission to make every retail investor as a fund manager of their own. And this is the key main motto of Peaceful Weekend Investing. If you're new to my channel or you've not subscribed yet, I would urge you to subscribe to my channel, hit the notification bell. And if you're liking our content, do like it so at least I know what videos you are enjoying the most so I can make more content like this. And if you want to join the live webinar, the link is given below. So you can just sign up and we can join with me for 90 minutes live webinar where I reveal the entire Peaceful Weekend investing process. So this particular video, please watch it till the end because what I'll be doing is I'll be covering up the entire analysis, 360 analysis, one about the company, which is a sector leader I mentioned, also linked with the sector, which is really on the tear and also which is showing an upturn after so many years of underperformance. That is capital sector. So you can play this theme very nicely. And we'll go through the fundamental analysis of this company, go through what is actually changing fundamentally, and also link that up with the technical analysis and see how price action is supporting that. Because smart investors are the investors who understand the company fundamentals and then stay on it for long term to get a stupendous gain in terms of the so-called baggers, multi-bagger returns. And this stock is definitely poised for that. Is already given 4x return, but I see a long way from here. So without further ado, I will go through that and I'll share with you at the end my view about the stock, what I'm doing, and then we will probably discuss so that you can get a better view and make your own decision. So this is a strong stock giving you a breakout after 3.5 years, close to that, and with a huge volume. Okay. So this is a stock which is linked to the capital market sector and which is definitely a leader in that space. So let's go. First of all, before we get into it, I want to give you a complete disclaimer. This is just for education purposes, as you don't treat this as any investment advice. And I'm just sharing so that you can have a better knowledge about it and take your own decision by taking your advice from your financial advisor. I'm just sharing that so that it helps you. So this company I'm talking about is a Sanghvi mover. Now this company is been in the business for a long time, and this company Sanghvi Mover Limited SML is the largest crane rental company in India. It's ranked 5th in the world and by the International Cranes in June 2021 issue. So it's a kind of an 5th in the world and largest in India. And it was incorporated in 1989 and went through public in 1995. So it is time tested and it's been listed for a long time now. So it is definitely and it has around 400 plus medium to large size heavy duty hydraulic telescopic and crawlers cranes. Again, it is from 20 metric ton to 1,000 metric tons. So they definitely are having a presence into that space, which are obviously having the largest fleet in that space. And over 3 decades, they're into this rental business. And they are certified, a lot of ISO certifications they have, and being the leaders in this space, so they have a good advantage positions. And their management is really capable enough to understand this business very well. They've gone through a lot of cycles because last time when they did was they kind of taken lot of crane orders, and this cycle turned downwards, and that's what gave them the biggest hit, and stock prices tumbled badly. Now they have understood that from that mistake that that should not be the case. So they have kind of, and also they were very, very focused onto some few sectors only, especially windmill. And when that didn't work out well, so they kind of had to rejig their business model. Now they have expanded into various other sectors as well, which I'll talk about in a minute. So they are pioneers in the crane, and their projects are into infrastructure projects with power, steel, refineries, cement, minerals, metals, and metros. So as you can see here, all of those verticals, wherever the crane requirement is there, the rental business comes to them because they are the leaders in that space. And that's where, and they already have all the pan India presence in that space. So if you can see here, so they have around 20 depots across the country to ensure the timely deployments of cranes. So they're kind of pan India presence, so they can easily supply the cranes. And the sector they are in is wind, steel, railway, metro, power plant, cement sector, petrochemical infrastructure. So they're kind of everywhere. So they that way, earlier they were kind of only more focusing on wind. Now they kind of expanded in all the other sectors as well. So that way, it gives them the better view on that, so they can have a better utilization of the cranes. Now, let's go to the fundamental aspect of this stock, right? Now, knowing about this company, you need to also understand what is this sector talking about. What is the sector tailwind here? Now, what is the market size of Indian crane? So this is like around $1.3 billion and compounded annual growth of around 5 to 6% volume, and that's what is expected. Again, I'm quoting from this article, which is there on internet, so you can check it yourself. So definitely there is a growth in the sector. Unless there's not growth in the sector, you can invest in a company and there's no growth, then obviously you're not going to have your company doing well. So Sanghvi mover, it is decent growth. I wouldn't say high growth, but decent growth. But given this is a market leader, so you can definitely bet on such stocks because the capital cycle is looking up. All the steels and also other sectors like chemical, they're all kind of, India is poised for that growth. So definitely this is a pseudo investment which you can look at a second order derivative. So going to the recent rating upgrade they had, okay. So I just want to quote, it is available on the company website. They got recent rating, I think it was last year mid. So what it says, you need to understand that because that also tells you the story. Always look at the ratings view. So recovery in demand and improvement in receivable and timely materialization of asset monetization plan they have paid their debt. And the most important thing is order book is looking really good in both construction, mining, infrastructure segment, and they have refinanced to lower interest rate, which is fantastic. So in that way, and same time they have reduced their loan. So that way, they have a less outgo from in terms of the interest outgo, and they have reduced their debt. That way, you can see that it will be a value creative, so it will go into the underlying of the business once the cycle is looking up. Obviously, when they're giving back their debt, that means they're generating cash and they're able to pay back their loan. And this is from the last debt cycle they have done. And most importantly is that there is no further capex plan. So whatever capex they have done already. So there's no capex. So whatever the business they're going to get incrementally, all going to go to the bottom line. Other thing which I want to also highlight is it's a cyclical company. Okay, so obviously you have to have a clear view of when you're entering, when you're exiting. It is definitely not a stock for a long-term portfolio hold. Okay, I just want to be very clear. I'm not, analyzing this company to be a long-term portfolio hold. It is for cyclical. So obviously you have to know exactly when to enter and when to exit so that you can, focus on the profitability of the stock position and just treat it as a trade. And having the view of fundamental and technical analysis, it becomes easier for us to view that together. One thing I want to highlight is also it's noted here is there's a court case going on, which is around 525 crores against the due of VAT and CST, and it's under appeal. So before making a decision, you should look at these two analysis, which is kind of slightly negative for the company. It's cyclical, and also there's a court case for that. Okay, so let's move on. I will quickly share the fundamental analysis view so that we can go through that as well together. So if you can see here, this is screener.com analysis of the, and you can get all the financial data very quickly and assess it. So let me take you through some of the key points here. So first of all, you need to know it's a market cap of 1,000 crores, and the data days, which are the days they can recover, this is around 92 days, so approximately. So far, they're negative ROI, and I'll tell you a negative ROCE because of the challenges being a cyclical. So you have to ignore that, and you have to focus on few of the things which I'm going to be sharing now. And if you go down, stock price from last 5 years, and you see here, last 5 years, the stock price has been where it was in 2018. So that's where I was talking about, and I will do that again. So if you see here, this is the price around 250, which is what it's trying to cross. So it has been in the nice VCP pattern, or it is a cup and handle saucer pattern, which is formed, and we'll go through that last 5 years. So it is uh, giving us a breakout. Company has reduced debt and expected to give a good quarter. So this is what main pros are there, and obviously it has a highest in low interest coverage ratio because just had too much of debt and they're trying to reduce. So hopefully that will um, you know get better. And also I told you conditional liability of 527 crores because of the court case which is going on, which will be negative. Let's look at some of the things what are here, what we're noticing in the quarterly report, right? So as you can see here, the sales has been, they had a big dip in June, which is where they had cycle turn, and now things are looking up from there on, right? The sales are quarterly increasing, and previously they were doing a run rate of average of 80 crores, and then now it is around 70 crores in September. And what is also important is the EPS has turned, earning per share has been negative all throughout a quarter. Now this turned positive, right? Which is a great, and that's why you can see the story here. What is coming is that the stock prices are taking because they're able to generate cash now. Let's look at the some of the things which I want to show you quickly is the balance sheet. So we see there have been some reserve which is increasing. So they have a reserve of 698 crores, which is decent. So they have a good reserve, which has not gone down. So there's reserves there, and their liability has reduced. Total liability has reduced. You see, it's sitting 932 crores. The most important is the long-term liability. So if you see the long-term liability is 117, borrowing is 179, which has come down from almost 500, 600, and then you see here now it's sitting as 179 crores. So they're reducing their liability, and this is what it was also mentioned in the report as well. And you can see here in the cash flow, right? It is also evident that interest repayment of borrowing, they have been repaying the borrowing here, so which is good. So you can see here repaying of the borrowers from the last 3 quarters, which is a good sign. And also there is no further fix. And the important point is the fixed asset purchase also has gone negative. So they have done all the all the capex has completed now, right? So that way that is also good. So you have this here, you focus there, the interest payment. So it's that way, it's all the business part is doing well. So that way, that is definitely in industries now coming into profitability. And the most important part here is the debtor days have reduced from 200 to now 92 days. So that means the collections are good as well. And ROCE, which was earlier 19-16%, now it's sitting around -2%. I think in coming days, you will see the ROCE improving because they will have a let's look at the other aspect of the business. So here the promoter has maintained their 47%, which definitely is also a good sign. So there's no liquidation from promoter side. So they have a good, healthy 47%. They have a skin in the game. FIS, so they're very marginally no FIS. DIs also have reduced drastically. So that could be a bit negative because we expect the strong hands to be there in the stock. So again, that's a little bit increase from June quarter. So as things improve, probably there could be some FII buying or the mutual fund buying can happen. So this gives you a picture here what's going on in the business. So they are paying debts. They are the business outlook is looking good. So that way it is something which you should keep in radar as part of short-term investment, right? So as you see here, we have done a complete fundamental analysis view of what's going on. So now as a next aspect, I want to take you through the technical analysis, which also gives you what exactly the price action behavior is, right? Because if without that, the analysis is not complete. You need to go through both fundamental analysis, where we have already seen that the debt is reducing, the management has not reduced their stake, so they still have 47%. And also at the same time, their debtor days have reduced, so they're able to recover their rental income from the cranes, which is good. Now let's quickly go through the technical analysis. So this is a trading view chart, which is on weekly chart, so they get a better view. I think on the monthly chart, you'll have even better. I'm generally looking at only charts starting from monthly and weekly. So if you look at it here, what do we observe here? The stock is completely cyclical, which means, as I told you, this is a cyclical industry. So you need to make sure, you need to know, you have to enjoy these kind of rallies and get out of it before the cycle turns. And last, from 2016, this has been completely downturn, but now the cycle has turned and the trend has changed. As you can see, trend has changed around 150. So now the stock is looking up. So let's do a complete analysis and see what is that I'm seeing on the chart. So first of all, as you can see, the stock has given a nice breakout here at this level, which is 144, right? That's where the trend has changed from down to this was a downturn, and now the trend is looking upward, right? So this trend changes at this price, which what I can see. Now, stock has never ever crossed this level, right? So this is kind of at the moment, ceiling for this stock, right? And you can see here the stock has tried to do that at these two junctures. One is in 2008, another one is around 2015, but couldn't break it. And this is another attempt. And most importantly, what I am more interested in, you see this journey, which is the stock went from 35 to 310 times, right? So this is kind of move it can give very fast. And that is what you need to know. And right now, already the stock has, from the lows, it has given already from 35 to 236, which is almost like kind of 5 times or 4 times they're given, the return has been given. So you can see there's still a bit of a rally up. So let's see what is the analysis. So if I use the Fibonacci extension, which is, I think it's a good, fair way of looking at the companies like this. So I don't know whether how much you use everybody uses the Fibonacci retracement, but I use the trend base because this is a capital company. So if we use the trend base analysis, we can easily know that this is 3 points. So what we do is we take the low we connect with the swing high and then go to the swing low. So this way it plots me the Fibonacci retracement trends. What are the different levels I can see here? So first of all, what are the key levels which I need to watch out for? One is the 1.68, 1 and 0.68, right? So these are the key levels which you have to, or you can say profit target levels, which we can look at it. And as you can see here, there's a confluence of both um, confluence of the key levels and also the some of the resistance. So you see there, the stock is coming out from, if I look at it, what I was saying is the stock is coming out from almost 3 years of consolidation or 3 years of it. And what is that? Let's the stock was kind of giving a nice base formation, and it's giving a nice clear breakout from this level, and that's what is got me interested in stock. And this is where we have to look at it, because it has given a close above that. Let me remove the drone. So this is where it has given a key breakout, but for me it's important it should close. And what I'm looking for, it should close about the rejection candle, which is the price of 239, that is 238.45. If it closes above, I think the next target easily will be, if I use the Fibonacci extension. So let's look at that and see. We grab here, grab at the top, and then wave down. And so the next level, it will be 280, and then easily we can see 340 the level. And if it stays and crosses above 400, then the targets are coming big. So, but we'll continue reviewing this at this point. Right now, I have a position. So I just want to be clear, disclaimer there. I have a position and in the stock, but I will be adding up more when it closes above on weekly closing basis or above 236 of this line, which I have here. And I just simply, what I do is just simply set a notification. Once the bar closes, I will get notification. And once that closes above, then I can look for immediate targets of around 350, and then it could touch around 400 levels. But important is that you have to keep that in mind, that this is a cyclical company and you have to be very careful, and it can be high risk unless you are not reviewing this regularly. So this is part of my lab portfolio and not part of my long-term portfolio. So this is a complete analysis, both technical and fundamental analysis. So give you a perspective how I'm looking at the stock analysis for company. Hopefully this was useful to you. And if you have got some value from this video, do hit the like button and also subscribe to the channel. And I'll be coming out with more videos like this in this new year. I've got lots planned out. So looking forward for that. So quickly talking about what are some of the key green flags, which I think positives of this company is, one, the promoter is really, really strong. And I think promoter has a good know-how of this industry. That's one important. Second is that it is an industry leader, which is the most important thing. They are the industry leaders, so they will have a better market share. And when the cycle turns up, they are the one who are going to get benefited. And capital cycle in India is looking very positive after so many years. So I think that's something which you can use that as a basis and try and invest in the capital cycle stocks. And this is one of the company you can play the capital cycle. They have a pan-India presence, which is another positive. There's no capex coming in next few years, so which we can definitely say whatever the business they will be doing incrementally, all coming to the bottom line, which eventually reflect in the stock prices. And one thing which I want to also talk about is the volume. If you look at the volumes which are happening in the stock, is also kind of in lifetime highs, and I'll show you in a minute. And management skills and domains are unmatched. So they are in this business for so many years. They have seen the down cycle. They have understood from the mistake. They learned from their mistake. That's why they have kind of expanded different business verticals now. Earlier, they were kind of only focusing on windmills. And so now they have kind of expanded, which is good. Red flags, they have some court cases, which is a 512 crores worth of contingency planning. So there's a court case there. It's a cyclical business, as mentioned to you a few times. So it's for short to medium term and not for long-term portfolio. And before I end this video, I will quickly show you the volumes and you'll be surprised. The volumes are just simply remove the indicators, add the volume. You see here, these are the lifetime volumes which are happening here, which will give you a strong indication that the stock is going in strong hands. And never before this kind of volumes have happened. So that tells you that what going on. So it added up to the conviction. Again, as I said to you, for me, everything is a probability. So you have to improve the probability of your stock investment portfolio. Nobody knows the future, what it looks like. Nobody can predict the prices. What I'm interested in, you should start loving the stock returns, in love with the returns, not with the company. And I've done that mistake in the past as well, that I get so associated with the companies and don't look at those, charts which are showing me different sign, and hang on to those stocks while they're going down into paper losses. So it's important that not only you study about the company, but also look at the charts and take the decisions. That's all I have to share today. I hope it was useful. You got some value from this video. And I have all the links below if you want to join the community. There's a free Telegram group. You can join in. I'll leave the link below so you can join to my free Telegram. So I keep sharing a lot of new insights over there as well. Till then, till the next video, I'll see you. Goodbye.